Welcome, everybody, and thanks for joining our webinar today, hosted by Workstream and Pivot Accounting. Today, we are really excited to dive into the world of franchise accounting and how our partners at Pivot are really experts in this space and just tapping into their knowledge because it's not something we often cover with our webinars here at Workstream. So we're very happy to have Jonathan from Pivot here today. Quick agenda. We'll give you all some quick intros to both of us, and then really just diving into our Q&A with Jonathan. Then we'll sum it all up and leave time for questions from the audience. So have your questions ready. But it's great to meet you all and just quick intros to our panelists today. So my name is Leah. I lead strategic partnerships here at Workstream. Been at Workstream for nearly 3 years now. And I have the pleasure of working with our awesome partners like Pivot. Jaren?
Thanks, Leah. Hey, everybody, I'm Jaren. I'm on the marketing team. I've been here almost 7 years now. So over those years, I've had a lot of great opportunities to meet with a lot of restaurant owners and learn more about their HR operations and so on. One fun fact is I was an early customer at Workstream, customer number 3 or so. I used to have a house cleaning company, and when I had that company, I did have an accountant. And so this prepping for this webinar was a lot of fun talking with Jonathan to understand the nuances between working with an accountant that's really specialized in your field versus kind of a general, commonly, family office type accounting firm. So really excited to cover these topics with Jonathan today. Jonathan, to you.
Yeah, thanks, guys. It's an honor to be here. I'm Jonathan Martin, co-founder of Pivot Franchise Accounting, and excited to answer any questions you guys have. So again, thanks for the invite to participate. Really excited.
Awesome. Now, before we dive into the Q&A, wanted to just give a quick 30-second intro to Workstream for anyone who may not be familiar with us. So Workstream we cover HR and payroll for restaurants. We make it really easy to take care of your team, take care of your people. We were started in 2017, and today we're in over 35,000 locations, mainly those being QSR, fast casual chains, brands we all know and love. We are in 46 of the top 50 restaurant brands, partners to Inspire Brands, RBI, you name it. Here's some of the customers that we have the pleasure of working with. And here's just a very high level view of everything we cover. So we actually started out as an ATS back in 2017, back when staffing and through COVID when staffing was extremely hard to do. So we have best in class hiring tools to help you find qualified applicants and get them on your employee roster. And through that, or after the ATS, we have all the tools from onboarding, payroll, helping you stay compliant, which I know we'll talk a bit about today. So everything you need on the people side. But part of the reason we're doing this webinar with Pivot is because we know HR and labor management is just one part of the picture. The other piece, and probably the more important piece, is really on the financial and accounting side. So we're excited to dive into more of those topics with Pivot today. And Jonathan?
Yeah. So Pivot, we basically started. My partners and I have previously run and arguably co-founded another franchise accounting firm. Took a lot of battle scars from doing that for over 12 years. And then when we founded Pivot, we wanted to take a customer focused approach. So we are really, really heavy on the customer service side. So with us, you get a direct human being that you can talk to and that you can rely on. You'll know their name and their phone number. And so we've just learned over, almost 2 decades of doing this in the franchise accounting space that it's just crucial for a franchisee to have a dedicated accountant that knows franchising and knows the brand and knows their business particularly. We're in over 20 franchise concepts at the moment. I think it's closer to 28 at this point. And yeah, love what we do. Very passionate about taking care of the customer. So we always make that our focus. Yeah, so probably the biggest thing to call out is we focus really heavily too on timely and accurate P&Ls and balance sheets and cash flow statements. We want our franchisees to not be waiting around to get their financials because I'm sure some of you on the call may be experiencing this or have in the past where you have an accounting group or an accountant and you're just sitting around waiting and you can't wait till the 20th or the 25th of the following month to make decisions on your business. So we're really, really heavily focused on turnaround time, getting P&Ls out the door as quickly as possible, but also making sure that they're accurate and relevant. Obviously, we handle franchisor reporting. So the vast majority of our brands do have a requirement to submit financials to the franchisor. So that's just built into what we do. And we work on across several different accounting platforms. So we're not just a QuickBooks Online. We're not just a Restaurant 365. We can handle a variety of different platforms. So we can talk more about that when we get into some of the questions too. And just some fun quotes from our our loyal clients.
Awesome. All right. Here I'll pass it to Jaren to start off our Q&A.
Sounds great. So before we open up questions to the audience, we're going to kick off with a few uh, big picture questions. There's four categories that I want to cover here. First one's around, you know, what your accountant is specialized in. The second question is going to be around managing your financial performance at the per location level. Fourth category is going to be around labor costs. Or sorry, fourth is going to be around growing your business. So, Jonathan, kicking it off here with question number one. Let's say that I'm a franchise operator. What am I missing out on if my accountant is not an expert on the franchise industry? Or to put it another way, what do you notice with your new clients that switch over from a previous, more general accountant?
Yeah, I mean, it's a great question because when you get started, if you're opening your first location of something, you don't know what you don't know. You're probably a great business person, but you don't know that you actually do need a franchise specific accountant. And there's 100 examples that I could give, but one that comes to mind was based on something you said at the beginning about we were joking about gap reporting and things like that. A local bookkeeper or somebody who might be referred to you from we literally just had a two-store franchisee in Marco's Pizza that I was on the phone with yesterday who was using a local bookkeeper but had never done franchise bookkeeping before and had no idea really how to accrue certain things in the books to properly reflect labor in the proper period. So in other words, if you're running 12 months of payroll versus you're in a brand like Jimmy John's that has 13 periods, how you allocate and accrue labor is very important. So you don't have a month that looks really skewed in labor. So your P&L just gets destroyed because you didn't accrue it in the proper period. And that's just one example. Most bookkeepers that are just kind of working part-time for you aren't going to notice to catch things like that. So yeah, that's just one great example of why it's so important to have a franchise focused firm or accountant.
Yeah, and I think we'll be covering even more examples. On this slide here, Leah, go back one more. If I understand right, this is some of the topics that you cover when you're consulting with some of your clients. Do you want to touch on any of these before we move on to the next question?
Yeah, I mean, candidly, I almost always start with three, believe it or not. I'm always helping franchisees think through even if they're opening the first location and they haven't even thought about what an exit would look like, the structure of how you set up your books and how you set up your chart of accounts and how you set up the way you book everything and allocate expenses and revenue. It's so crucial to be thinking through the lens of if I wanted to sell in 3 or 5 years, you really need to be thinking about doing that properly from the first day that you start generating a dollar at your first store. It's so critical. And then, of course, yeah, getting started in terms of just the core components of having a one-to-one banking relationship. If you have 3 locations, don't try to run your operations all through one account and try to allocate expenses by location manually. It's just all these little nuances are very important for structure when you get started. And then, we'll talk about it a little bit more in a few minutes, but when you're scaling to 5 to 25 and beyond, which we have clients that are, a single store, and we have clients that have over 100 locations. So while the needs and some of the reporting might vary, the core components of how they set up at the beginning are still the same, and they're all very, very important.
Fantastic. All right. Okay, question number two. And this is around your P&L, your revenue, your expenses, and your profitability. Jonathan, what do you advise your clients when it comes to measuring financial performance at the per location level? And what are some of the common mistakes that you see with measuring that?
Yeah, I mean, to kind of belabor the point I made a second ago, if you have multiple locations, I would highly recommend trying to avoid running all of your expenses through one bank account and then trying to split them off. So, for example, the vast majority of franchisees that get started when they have one, two, three locations are most of the time they're on QuickBooks, QuickBooks Online, something like that. And to save costs, oftentimes franchisees will use QuickBooks and then use the classes within QuickBooks to account for different locations. And 90% of the time, that just leads to errors in allocating expenses correctly. So your store level, unit level economics are very rarely accurate and defensible. Like, in other words, if you were trying to go get a loan or you were thinking about taking on a partner and you needed to get a real true value of the business, if you don't have your accounting set up properly to allocate by location, it can all of those things can become a serious headache. So we always recommend setting it up correctly. Um, and then in terms of just like the actual unit level, it's so important to keep things clean. Like when I talked about exiting and thinking through the lens of exiting, we always encourage franchisees to not all the time, but most of the time, create some sort of very clean administrative level above the stores so they can allocate labor properly, G&A properly. You know, if you have three, five, 10 locations of something and you're taking owner compensation from the stores, you know, you want to make sure you're setting it up so that's very clean. You don't want to just kind of arbitrarily pulling money out of a store as an ATM because that's really hard to go back and defend against later when you're trying to get the most value for your stores. So just a few examples, but and there's so many more that I could rattle off, but those are just some key things that kind of come to mind.
Fantastic. Go to the next slide here. We touched on some of these, but any more, Jonathan, you want to touch on as it relates to that topic around tracking per location?
Yeah, I mean, it's also really important, I think, for from a tech perspective to be using platforms that can pull data in almost in real time as much as possible. Like we love working with Workstream because our clients that use it, we see the labor getting booked almost in real time. So it helps us actually advise them faster as opposed to somebody who's, you know, again, back to the kind of I'm using a part-time bookkeeper, for example, and they're booking labor 2 weeks after payroll's been run or whatever it might be, and then it's almost impossible to go back and make a decision for scheduling accordingly. So using technology that can help predictability improve is so, I mean, it's dramatically important. And you can't make a decision on your books if they're not being done timely, right? It's almost impossible. You're just kind of winging it, right? We don't want that.
Yeah, yeah. All right. Before I ask question number three, audience, get your questions ready. You should see in Zoom the Q&A section. So feel free to start asking them now. And then once we get onto the audience Q&A, we'll go through and start answering those. So just have them ready. Okay, so this next topic here, labor costs. This is something that has changed a lot over the past few years, right? Labor has just been changing in the industry. Minimum wage has gone up. Hiring and turnover have changed. And this is often the biggest expense on somebody's P&L. So, Jonathan, curious, what advice do you have for your franchise clients about how to be proactive at managing and minimizing their labor costs?
Yeah, I mean, the first thing that we notice that's it's almost impossible to miss when you talk to a franchisee that's using systems that are a little dated and don't pull in data. Inaccurate forecasting and preventing overruns of labor is so vital to avoid. We both share a lot of Jimmy John's as clients, Workstream and Pivot. So one of the things we love is we can actually go into our accounting software, take your labor data that's getting pumped in, and then we can actually help our clients look at what a lot of franchisees call day parts. So you're not just going, okay, what was my labor last week or what was my labor yesterday? You can actually look at parts of the day and then helps the manager at the store level or the district manager or area manager, depending on the terminology of the brand, right? Actually forecast based on what was labor as a percentage of sales yesterday from 10 a.m. to 12 p.m. and really kind of digging into those metrics. Without doing things like that, you really are kind of relying on the store level manager a tremendous amount, which we all do. Like, every operator obviously relies heavily on a store level manager. But that being said, there are ways to empower the management team to be able to forecast labor better. And things like Workstream, integrations that they have with different accounting softwares like Restaurant 365, which we use heavily. All those different things can really lead to better decision making and better forecasting for labor.
Yeah.
The other part, which you guys are really, really good at Workstream, is compliance. We've had numerous clients. One that comes to mind, that's a very large operator, over 50 locations of a particular brand. They had a store where they didn't have proper systems in place to capture somebody who wasn't of age to use a particular type of slicer or machine in the store. And so they had no way of knowing that this person shouldn't have been running this machine. So they ran into a Department of Labor problem, and it was kind of a mess. And then they since moved to Workstream, and obviously that went away. So it definitely gives credence to what you guys provide to franchisees. And I'm not just blowing smoke; like, that's a real example that happened and something that we helped them through. But you really need to have good software in place and a good team of accountants, like, franchise focused accountants that know how to look and use that software appropriately to help them forecast and prevent violations and Department of Labor issues.
Yeah, compliance is something that we've been really excited about at Workstream. It's one of our newer products. The way I like to phrase it, right, is worst case scenario is you find out about some kind of infraction when it's too late. A
Yep.
better case scenario is that you find out about it, before you get fined, but the infraction still happened, right? And then the best case scenario is to have preventative measures so that way the infraction like wasn't possible to happen in the first place, right? And this is an area that we're growing in. We're adding more and more areas where we can spot and predict and be proactive around potential compliance risks, because they range across Department of Labor or financial reporting, and so on. So it's something that we're really excited about.
Yeah, well, I can attest that it's a lot of our clients that are using it. Specifically, Jimmy John's just comes to mind because we do a lot of them, but the ones that are using it love it. And we just came back from their conference a couple of weeks ago, and they were singing your praises as a software platform. So I can attest.
Yeah. All right. Moving on here now. So this is the last of our four sort of categories of questions before we open up to Q&A. And this is around growth. So Jonathan, you've seen a lot of operators from every stage, from a one unit to, you know, double digit, maybe triple digit number of locations. What does the back office actually need to look like for someone to be ready to grow? Or in other words, what are the best operators doing that you're seeing to prepare for their growth plans?
Yeah, the successful operators, multi-unit, owners that have scaled, um, have built a system or had a group like Pivot combined with some other, third parties or a work stream of the world to come in and basically systematize everything. So when the month end close process happens, the accountants aren't chasing down transactions to code for the client. The data is getting pushed in seamlessly, so it makes for quicker reconciliations. We leverage as much automation as we can, but it really comes down to setting up properly. Kind of goes back to the first slide we were talking about, right? Like, having all your ducks in a row and having everything structured, whether you have 5 locations or 50 or more, the same is true. Like, you want every piece of data coming in seamlessly and have a standard operating procedure like we do for all of our clients, that when we get to the first day of the following period, our team is not scrambling to put out fires or chase down an owner to try to get an Amex bill coded. Right? We address all of that throughout the month or the period to make sure that it's a really quick close. And if you try to figure that out too late, the catch up process is so daunting. And franchisees, we get a lot of leads all the time from franchisees that are using a different provider, or they've hired a bookkeeper or an accountant, or maybe their CPA that's done their taxes for 20 years is trying to take a stab at their books. And they just don't really know how to set it up properly for a multi-unit franchise operator. So we take great pains in making sure that that's just running smoothly. And to use a term you all like to use, we almost want the process to feel boring to the client, so they don't even feel like there's much going on in the background. They just know they're getting a deliverable every month that's timely and accurate and reliable, so they can actually make business decisions.
Fantastic. Excellent. Let's go on to the next slide here. So we're going to be moving on to Q&A, but just to sum up some of the topics that we covered today. So number one is around the benefits of having a franchise specialized accountant and some of the blind spots that uncovers. Number two, knowing your P&L. In order to know your P&L, you really need to be looking at your metrics by location. Three, managing your labor costs really starts with visibility. If you don't have visibility, you can't change things. But once you do, then you can kind of figure out where to diagnose and make changes. Last one, preparing for growth early. Even if you don't have plans for growth, my takeaway was that the way you run your business to prepare it for growth or exit is the same way as preparing your books to just run an efficient business, right? And not be scrambling to have everything be really messy. And so, really, if you have your charter of accounts all set up well, then it just makes the day to day go better, and it prepares you for all the other things down the line. All right. I know I have some questions coming in, and I'm going to pass it over to Leah to read off some of these questions from the audience.
Awesome. Thanks, Sharon, and thanks, Jonathan, so much. I feel like even I learned a ton, so I hope our audience did too. But yeah, looks like we have some questions in from the audience already. So Francie asked, how do you handle 3PD reconciliation, specifically between the POS system and the 3PD statements?
Yeah, so on our side, we suggest different softwares for that. Third party is a big deal. It's becoming a bigger deal because unfortunately, we had a client who came to us a little too late, that waited too long. And when they realized they had lost thousands and thousands and thousands of dollars that they hadn't received, um, we did our best to try to implement some tech, and we got some of it back. But my guess, the cautionary tale is, don't be afraid to use a third party system for reconciliations, and we implement them a lot. So we'll use things like Loop AI, or we've used Otter in the past. There are different tools to track all of that and to make sure that you're collecting the money that you're owed by these guys. Um, no offense to any of you that might be on the call that represent some of these groups, but they tend to act sort of like the mafia in a degree, where they just don't really have an incentive to make sure you get paid. So we always encourage, and we'll implement those systems for our clients if they'll allow us to make sure that they're getting every dime they should be getting.
Yeah, this is great, Jonathan. You're seeing that because you have the 15 years of experience in this industry, you just get to see the tech stack of so many different restaurants. So some of the advice that you give is not on like a general basis of, hey, this is applicable to manufacturing and healthcare and
Right.
automotive. But
Yeah.
this is what I see working for restaurants.
Yeah, that's right. That's right. And this goes back to your point earlier about just the importance of having a franchise focused accountant, because I've come from very, very large CPA firms in the past, where I've worked and consulted with. And, you get an accountant at a firm who I'm sure is great. They're a great accountant, but, they're closing your books out as a tropical smoothie franchisee. And then 10 minutes later, they're reconciling bank accounts for a construction company. And it's very difficult to have enough wherewithal as an accountant to be able to laser focus on an industry and be good at it. So highly encourage you to reach out to me, or at least try to find a franchise accountant for sure.
Yeah. Jonathan, really quickly, there was something we talked about when we were preparing for the webinar. You told me about some examples of a client that you worked with that had staff that worked across different locations.
Uh,
Different locations across different state borders, right? And
yep.
around overtime. There's also another one
Yeah.
that you mentioned around revenue recognition with third-party um, delivery apps. You could take one of them or both of them, but I just thought that was really important for the audience to maybe hear about.
Yeah. I mean, the overtime tracking is so important. If you're in a brand, like let's say you're in Jersey Mike's, where you have potentially some people who are doing different roles, or maybe you're a Domino's franchisee, for example. Some of these different employees are doing different jobs throughout the week. They might be driving for part of the week, and then they might be in the store managing the other part of the week. And then if you're across multiple states or different markets, even if you're in the same state and you have 5 to 10 locations, and you've got people traveling to different locations, it's so critical to have a payroll platform that can track that accurately. Because if you don't, you really do run the risk of getting yourself into trouble with fines and things like that if you're not booking overtime accurately. And then tips is another huge one. Like allocating tips correctly, if you're in a concept that allows your staff to collect tips and allocate tips, doing that accurately and making sure it's being weighted correctly across, who worked how many hours, which stores they were in, all those things are so important to get right. And if you're using a payroll system that's a little basic, it's going to be challenging to do that correctly or do it consistently across all your locations. So super, super important to get that right. Third party delivery, it's a constant thorn in the side of franchisees. Fortunately, over the last couple of years, some really good platforms have come to the surface that have made that a little easier. Most of them have gotten in the business of doing collections as a part of their business. So some charge a flat fee. Like Otter, I think, charges a flat fee, or excuse me, they charge a percentage of collected third party funds that never hit the bank account. And then things like Loop AI that just charges a flat fee per location, regardless of how much they collect for you. So I'm happy to talk to anybody offline about that and help you figure out which one makes the most sense. There are others too. I don't want to sit here and be an advertising board for 20 different tech companies, but it is important to implement those because it really can add a ton of cash to your bottom line that you probably aren't even really, something's off and you probably should have more coming in from third party, but you're not exactly sure how much or where's the leakage. Like you're just not really sure. And so a lot of these platforms that integrate with the accounting software, which is also very important. So all those things can be reconciled without weeks and weeks going by, and then you're just you're stuck there holding the bag, not really sure how much money you're due.
All right. Well, everybody, thank you all for joining. This was really great. If you have further questions, we will be in touch. And until next time, that was our webinar with Pivot and Workstream. Thank you, everybody. Enjoy the rest of your day.
Thanks, guys.
Okay.